There's a lot of excitement around the California Dream for All program where California will give you 20% down or up to $150,000 for a shared appreciation for your home as a first time home buyer and a first generation home buyer. If you're wondering what is a shared appreciation loan, this is the video for you. I'm going to break down using CalHFA's example here on how they talk about shared appreciation, and then also too as well show you a case study at 600,000. Hi, my name is Sunny Alcazar. I am a mortgage advisor with Neo Home Loans, and we are a certified lender through better.com to originate this particular mortgage and program with CalHFA. So going through their example here, and this is for anyone in the moderate income bracket between 80% to 120% of the area median income in your local area. And what they have here is they have an example of you purchasing a home at 500,000. Okay. At 500,000, they're giving you 20% down, which is the DFA loan at $100,000. And you're going to have a first mortgage loan of $400,000. And so, mind you, this DFA loan is actually 0% interest. So it doesn't accumulate any interest. And the only time that you can pay it off is when you refinance or you sell the home. Okay. Now, fast forward 5 years later, this $500,000 home is now worth $640,000. So the value of your home has increased by $140,000. And the agreement that you're stepping into by utilizing this program and assuming that you get picked through the lottery is because you've increased in value of $140,000, you're going to promise California a 20% share of the increase in value. So California's share is $28,000 and you keep $112,000. Okay. Now, what's so amazing about this program is you still get to capitalize on owning the home and have principal pay down go towards your equity. So sure, your first mortgage loan was around $400,000, but you're going to pay down $30,000 of that. And so the remaining balance, if you do decide to sell, is $370,000. Okay. And then when you factor in the $100,000 of the loan and then the $28,000 share, California gets back $128,000, right? And then your homeowner equity is $142,000, assuming the home sold at 640. Okay. So your total equity that you walk away with is around $142,000, and California gets $128,000. So this is a win-win situation with you as the first-time home buyer, first-generation home buyer, and also as well California providing the assistance. And what's amazing about this program is this loan can go towards your down payment and closing cost. And this really lowers the barrier. And you can see why the barrier of entry to homeownership in California. And you can see why this is really popular and why it dried up within the first weekend. Okay. So let's look at this specific example here. And we're going to go into a $600,000 or $600,000 case scenario. So if you were going to do just a normal 5% down conventional loan, you're looking at $600,000 here, monthly payment at $4,358, and then your cash to close, which is down payment and closing cost, around $55,674. If you use the Dream for All and they give you 20% down, it brings your monthly payment down to $3,730 a month. Okay, and then your cash to close requirement gets cut in half, and you're only going to need to cover your closing cost at $23,680. So you've cut your cash to close requirement in half, and also you have a $628 less monthly payment. Okay. And what's pretty cool is if you opt in to structure with a 15% down payment, you still get the full 20%, $120,000 in this example. Okay. Your monthly payment is slightly higher at $39.15, so $443 less compared to structuring the 20% down. But look at the cash to close requirement. It is now a negative number at $5,375. And that's the craziest part about this opportunity here with the CalHFA Dream for All Shared Appreciation Loan is that this gives the opportunity for people to purchase a home with zero money out of pocket, right? Now, obviously the caveat is shared appreciation. And so when you look at your net worth in the span of 10 years, okay, this is how much money you'd be walking away with minus the 20% share. So let's just do the math really quick. So This is already factoring in the loan payoffs. The only thing that we need to calculate for is the 20% share being received by California. And so in this particular price point, 600,000 in span of 10 years, assuming a 3% appreciation, which is super conservative. So 3% increase in value every single year is really conservative for California. You're looking at 800 minus 600. That's 200,000 times that by 20%. That's $40,000. So you give back $40,000 to California. So in this 20% down example, 320 divided by 40, you walk away with $280,000 for your share of equity if you sell the home in 10 years. In this example here, if you structured it with a 15% down, 296 minus 40, you walk away with $256,000. Okay. So you can see how impactful this program really is and how it can benefit you, right? Now, once again, this is a lottery, so not everybody is going to be selected, but I can guarantee you that if you qualify for this program, you do qualify for other CalHFA program assistance programs available to you. So I'd love to hear more about your goals. I'd love to schedule some time so that we can see and tailor this specific program to you and talk about the other options that you may have if you don't get selected. Once again, this is Sunny Alcazar with Neo Home Loans Mortgage Advisor. We'll chat soon. Bye.